Hello guys, welcome to the Trading Parrot. Bitcoin rallied into 95k during this week. It's been an impressive move, but this is a data-driven channel and we're gonna look into the data of the previous rally that people are comparing it with. I'm talking about the rally out of the megaphone pattern in 2024. We'll compare the current situation from the technical point of view using indicators, on-chain data analysis, and some other important factors. Understanding those similarities and differences are going to help us narrow down what is the risk at the moment of a failure, what should be expecting if there is a rejection in here, and how do we qualify that rejection into just a healthy retest versus a complete failure. And I'm going to put an emphasis today in the expected elevated volatility that we should be seeing in the next upcoming days. That's going to come particularly by the elevated open interest, liquidation levels that we are leaving behind, fair value gaps, and all of that. Stick around until the end of the video so you get the full picture, and instead of seeing just the tip of the iceberg, by the end of the video you should see the whole crap where we are sitting on, and then off you go, you make your own decisions. I'll give you an update on my position. Yesterday we entered again into the market. I update all my Patreon members, and today I'm gonna make it all public for the sake of transparency. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And thanks so much yesterday for all the views on my SUI video. I have big expectations for this coin. Make sure you don't miss this video today. And if you're a hardcore fan of Bitcoin and you don't want to miss any information, some things I said in the video yesterday, 36 minutes, I'm not gonna repeat today. So if you have time over the weekend and you wanna do the full catch up, make sure that you watch that one as well. And guys, if you wanna stick your hands on a trade very quickly, I guarantee you can open an account in just 2 minutes on Bluffing using the link in the description. By doing that, you get a 10% cash back and you can even win a Rolex. Just use my Bluffing link in the description. And if this video gets 1,000 likes, I'm going to add to the description of this video a discount code that is going to last for the whole weekend to get a full 50% discount on the shop on Patreon, which you can use to access my Telegram charts, 24/7 access to all my charts, all my drawings, or you can use to get access to all my Pine scripts, whichever you prefer. And this one, I'm gonna repeat it, which is very crazy. We are at 95k and the interest over time on Bitcoin is still at the very lows. We just bounced from 20 into 23. That is really unprecedented. That means that there's still lots of people doubting this move and not even searching about it, thinking that potentially this is just gonna end up like the Trump pump and dump we had when we went again to 95k. I remember selling that moment and then we were going back to where we came from. Just looking at some news in here, traders still offloading Trump holdings after dinner announcement. There was a little bit of a pump on Trump coin, but apparently people are still using it as a pump and dump. The sentiment engine of Bitcoin ETFs is rewiring the market structure, and I completely agree. We're going to look into what's going on with the spot ETFs in just a moment. I'm interested in this news, 5 Bitcoin charts predicting BTC price rally towards 100k by May. So I wonder what are those charts? Let's have a look at them and we'll contrast with the ones I have. BTC liquidation levels, on-chain data, and chart setups converge at the 100k target. Particularly in the liquidation levels, we are seeing targets much higher than that. You can see that at 101 we have that yellow, then we have yellow again at 108, but when things really become heavy and attractive for market maker to liquidate a whole more of the shorts is at 115 and then 125. Worth mentioning that if this rally ends up in a dead cat bounce around this area and we go back below the neckline of 89, for example, we could be risking to go into that 68, which is now comparable to going to 114 in terms of liquidity pools that we currently have. And I'm not saying that that's the forecast, that is just the risk, right? Failure here, an ugly failure could produce that. But something tells me if we fail this, we might still put a higher low. And we're gonna compare with 2024, as I promised in the beginning of the video, just to make the case for that and how is that gonna look like, so you have some expectations when it comes to the RSI and other technicals, what to look for. If we were to fall into 82, for example, what is the perfect picture from the technical point of view to identify a very high likely higher low versus continuation into 68? And I think that is where the key is. First, we have the double bottom hinting 100K. That is the double bottom that we have also identified previously. They are identifying in here a bull pennant on the 1 hour time frame, targeting 101K. We also identify the falling wedge, which we were for months looking at here, and we had finally that breakout after the double bottom. In this case, the target is 102 based on the high of the pennant at the top. Liquidation levels on Binance hinting 100K. Remember that this charts is just showing liquidity from the past 3 months. When we go into trading different, which you can find a discount in the description, it shows a lot more data and it's all live charting. So if you leave the chart on your monitor like this, after days, you're gonna see how everything changes, not just the price, but also the pools. We're also seeing a spike in supply in profit. We mentioned that in the video yesterday. The problem with supply in profit and all those metrics is that yes, they can indicate that there is a shift if they stay in the highs, but if they get a rejection, they also tend to coincide with each of the peaks of the megaphone pattern. When we were in this megaphone pattern, every time we were at the highs, we also had the supply in profit slightly in the positive, but that was a rejection 1, 2, 3, 4 times in a row. And it's worth mentioning that this is the first time in this structure that we do that. Just another data point, not a forecast. We can see it a lot more clear in the post from Glassnode. Here they're showing the short-term holder supply profit loss ratio. And you can see the question mark in here. You can tell that when you read the news, they're highlighting it as purely bullish and a complete win to take in consideration that data. That's why you should go to the source and see how many times we were in the green during the megaphone pattern, crossing that zero line, and still we put lower lows after that. So this data by itself is not the answer. Something that does look bullish though is the 27.750 Bitcoin that left Binance. That is the third largest Bitcoin outflow from the exchange history. And considering that Binance is the largest exchange, it is an important event, but as the tweet says, we shouldn't just look into single events, but more focusing on the reserves of the exchange. If there is a sustained trend with the exchanges reducing their reserves, that is what actually indicates that eventually you get a trend reversal. We can also observe the Coinbase premium gap. The premium is spiking multiple times during the breakout that we can see in here, and every time it spikes there is a local top. Every time it dips too low, you can see that the price follows up to the upside. But I think what matters in here is this trend shift where the lows are getting higher, getting bought up faster each and every time. And I got a gift for you guys. Jim Cramer says there is absolutely no way Bitcoin goes above $1 million. And remember, I have a trader's perspective, so I really don't care if it goes 1 million or if it goes to 0. But it's always something bullish to have Cramer as a reverse signal saying bearish things typically leads into the opposite. So at least I believe that this could be a signal bullish for the short term. And with this recent move into 95K, we've been saying since yesterday's video that it's being sold at profit. And now we can identify that the people that are selling at a profit are the short-term holder supply. We are talking about 359,000 Bitcoin that is changing hands. Apparently, as Axel is saying here, the exchange of hands is going from short-term holders into long-term holders, which is always something positive to see. This is something very recent. We are talking about the past 2 days. Open interest in perpetual swaps has risen by 281,000, almost 16% up since early March. This suggests a build-up of leverage in the market as prices rebound, increasing the potential for amplified volatility via liquidations and stop outs. So watch out for that. Listen carefully. You can have a bias. You can think we're going beyond 95K. Just don't be that dude that puts everything at the tip of the iceberg. Then you get rug pulled and you say, hey, hold on, what happened? Were we not going higher? Understand the level of risk of being right against a weekly resistance. Tomorrow is Sunday and we really need to pay attention how we close this week. We'll look into the weekly chart to get that sweet spot where we should be for continuation. Here we have the chart of gold versus BTC. And you can see the comparison looks very similar actually, although the timing is very different, right? So in here, gold has done this in 12 years. But it looks really similar to 2021, the bear market, the early bull market, the megaphone pattern in 2024, and then the rally of 72% beyond that. So adjusting for the volatility of Bitcoin, that means at 271%. It looks pretty cool. It is fun. I am not necessarily subscribed to this idea, or at least I don't see it happening in this timing, because this implies that by July, Bitcoin should be almost at 300K. If that happens, I will be really happy. I still have some bags that are definitely gonna benefit from this. I'm talking about my ADA bag, my Ethereum bag. In this channel, we have done forecasts of how high can Ethereum go based on Bitcoin when we do the chart of BTC versus Ethereum. And we have a target of 0.05 at the moment. And based on that ratio, that puts the price of Ethereum topping at $14,000. But let's put our feet on the ground again. I'm not convinced that we can get to 280K. I'm just saying, if we get it, I'm not gonna complain. And Tesla has done a 9% up. My area of value was from $240 into $300. That is the area that I call value because I was expecting Tesla to somewhere in here have some bounce. Well, we went slightly below it to 215. I can see why, because there is support and resistance at that level. I'm gonna draw it now. But if this is forming in here a weekly support, a weekly double bottom or triple bottom, if you want, with a neck at around 280, this could easily move the price into 360. That is an additional 27% up. And yes, during the week, we've seen quite an intensive accumulation on the ETFs on spot Bitcoin. We can see that on 24th and 25th, we have 63 and 104. Finally, we are outpacing the inflows, not just on Bitcoin, but also on Ethereum, which is also increasing the inflows. It's nice to see that it's not just on Bitcoin going on at the moment, but quietly and at a smaller pace on Ethereum too. But again, watch out for volatility because, for example, here an analyst from CryptoQuant is indicating that 80,000 Ethereum in the past 48 hours has gone into derivative exchanges. So I think we have pretty much guaranteed some intense volatility coming in the next week. And if you missed the memo yesterday, the Federal Reserve balance sheet took a deep dive in here of 6% down. We are still in the channel up, but crossing fingers that this is just a higher low and we don't reverse the trend back into the downside. I suspect that this was a reaction to Trump tariffs over this period in here because we were in a trajectory very aggressive to the upside, but immediately after the tariffs, the Federal Reserve decided to shrink their balance sheet as intensive as we did it to the upside before. The M2 is very high and going at a very fast pace. This is crazy. We've been monitoring these double bottoms and this double bottom has played out way beyond my expectations. I was just expecting to get to 111, but we've gone to 118. Something that I'm noticing in here is a little bit of a slowdown. We'll keep an eye on that. And on CME, yesterday we closed at a price of 95.8 on CME Premium, and on Binance that corresponds with 94,800. We have from the previous weekend a gap between 92.4 to 91.8, which we said more or less could bring the price as low as 91,600 to close the gap. But of course, we don't want the price over the weekend to go to this area because that technically is not gonna close the gap. Closing a gap means that on CME, any orders that are here get filled, but they won't get filled if the exchange is closed. So what I would like to see is over the weekend a little bit of bleeding into 93, 92, and then very quickly as the market opens on CME, we do a wick in here, and then we look for continuation to upside or any signs of reversal. Remember that if we complete this pattern like this, that is looking like a double top in there that could bring a deeper correction. I'm just preparing the table for potential scenarios. This is not the forecast, but I love trading, having an idea, a vision of different potential scenarios, and then inclining towards the one that seems to have one, the highest likelihood first, but second, seeing data showing that there is an interest to go in that direction. And we're going to look into that data just in a moment. Let's just leave this with the target below the neck towards that 88,500. We haven't completed the neck. This is not a forecast and it cannot play out if we don't complete the neck at 92. So if by the end of the weekend we continue pumping into 100K, we just erase this idea and forget about it. The beauty is to have it on the table and being ready and prepared to hit strong the market with a decent plan. Because once you are at 91, if you didn't think about it, you're going to start running in circles and saying, long or short, what should I do? Tell me about it. Some news about the aggregated open interest that I'm seeing in here is finally seeing open interest breaking out, following up with the price. And I'm currently in a short, so I am gonna play it very conservative in my targets to the downside, because seeing the open interest following up with a breakout of the price is not the perfect order. Usually I prefer the open interest to do it first. But maybe if we have a correction, that correction might be shallower than I'm expecting, and maybe I should be more conservative with those targets, and instead of expecting below 90, just take my 92, my 93, and maybe even flip it into a long. April is almost 15% to the upside, and the top bottom weekly has finally reclaimed support, which is great to see. It has only lost that support in 2022 in the whole history of Bitcoin. So this now becomes part of the second anomaly in the whole history of Bitcoin for this pattern to break down and reclaim. But of course, we want to see that ending well on Sunday. This is a weekly chart. And yeah, as I promised in the beginning of the video, I wanted to focus on comparing this breakout, the one that we're currently having, versus the one that we have in this area in here, September, let's say into November 2024, exiting from the megaphone pattern. And one thing that stands out is these lower highs that we can see in here, with the squeeze coming from the bottom, right? So you get a pattern that is squeezing the momentum and eventually having a pinch, a breakout, a global one on the 4-hour. Something that we must make very clear in here is that after the breakout in this area, you can see that the price kind of goes sideways, but the RSI resets to the very bare minimum at 32. The first pinch is 76. The second one is 84 and the last one is 90. Notice the pace. We can even put a line that shows how the momentum increases step by step as you go deeper into the breakout. 70, 76, 84, 90. 4 impulsive waves before we start seeing bearish divergences. As you see this area in here, you start seeing lower highs on the momentum. That's where the distribution starts happening. That's where I unload my big positions. So let's look at where we are in here and let's speculate that we're gonna get something very similar. So let's connect these 3 lines there. You get 72, 78, 86. That is the last one. What I'm not seeing at the moment, and this is completely honest, unbiased feedback, technical, is right after this pinch number 1, 2, and 3, each and every time we went back to fully reset the RSI to levels of 30, 31, 32. You can see that there are big resets. It pinches very high, but then it resets back into 30s. So what we are seeing in here is the first pinch, pinch number 1, 73, then 79, and then we go back to the 30s. Let me remove back out of the way. We reset at 27. Here we reset at 20, and then we did the 86. So that is the third pinch, and it's as high as the third. So this is 1, 2, and 3, 1, 2, and 3, and the third is around 84. The last one was 90. 90 is the highest momentum, but not the highest price. That's thanks to the bearish divergences. So what I'm expecting in here is pretty much what we had after the third one too. A reset around 30s or below 30s. That means the RSI coming back down into an area like here, and then another pinch back into 90. That is if we repeat perfectly by the book the past performance. By going only as low as 62, it's not a full reset of the 4 hour. It doesn't mimic what we did before. It can still happen, but these sort of breakouts with people getting liquidated tend to push the price deeper as a reaction to entering new areas of resistance. And in here, what resistance is coinciding with 70, 76, 84, and 90? Well, pretty much each and every high that you have in here. This high that coincides with that one, each and every one of those levels were packed in shorts entering. And every time you pinch one of those levels, you hit their stop loss, you hit the risk, and the price comes back down. That is how you get into 30s. And here we have the biggest resistance, which is 95K. All the support there has liquidations, and I still don't see a reaction back down. Does it need to happen? No, nothing is guaranteed. Nothing plays out the same way every time. But you get pretty much a 90% of a reaction in here to the downside. If we get that 10% and we just cross this line like nothing, I'm just gonna say, whoops, that is very low likely, but it's okay. What is the next level that is important? Well, if we get to the all-time high, or if we get into these order blocks at 102, for example, all those levels are good recipes to reset the RSI to levels of 30s again and continue with the breakout. Notice the whole analysis is kind of over-assuming that the breakout is just gonna play like 24, which I don't think so. I am prepared for surprises in here because there are many things that are very different from metrics. Daily still holding the support of the breakout. We haven't yet gone to 62, which is now a price of 92,000. Momentum still seems very strong. We are now testing or getting very close to the point of control that we talked about yesterday. That is 97K at the moment, biggest volume. If we see rejection from here, we should expect volatility. If we break out beyond 97, we should also expect volatility, but in that case to the upside. We are ready for a beautiful picture by Sunday. If we manage to close this candle beyond 93,700 in here, we are reclaiming the bullish side of the weekly, which is this second half in there. The lower half is the bearish side. And you can consider this whole pattern a bullish pattern. It's not a perfect W because it doesn't meet in the middle with the neckline, but let's say we get a rejection in here and we could form some cup and handle by only going as low as 88. That is still bullish, guys. When I say 88, people say, why are you so bearish? You just need to look away from this and think, if this doesn't work out, breaking out this week, and we were to close at 93.6, is that really bearish? Well, it's only bearish for the poor dudes that enter in a long on the first attempt to reclaim. But if things are as bullish as everybody thinks so, 88 should be a strong re-entry to form a cap and handle. Of course, if you enter there and you get dumped into lows, you need to have a plan of where to exit or where to DCA. Because at the same time that this is a perfect recipe for a cap and handle, if the handle fails and you take the lows, this whole thing becomes just a dead cat bounce on the weekly. And that should easily go to the liquidation level of 68. So you see how I trade. I have all scenarios that I can think of in my head and I prepare a plan. At the moment, I'm in a short, but if we go to areas of value, I'm going to enter with longs, I'm going to hedge, I'm going to close shorts, I'm going to do different things. So if you want to know what I'm currently doing, I entered with a short at 95.5k yesterday. In my video, I already said that was my intention. I couldn't enter at 96 as I said in the video because it took me a little bit to take the order, but I managed to get a good compromise at 95.5 with a small volume. If price goes beyond 95.5, I am thinking to add in a short, but I need to be really careful at certain point where I need to hedge, and that's why I make sure that all my patrons are very well aware that my shorts are really risky. And if I need to make a decision at any single time, I will inform them, but maybe they are going to be sleeping by the time they get the information and it might get ugly. Yesterday I talked about this double bottom on the weekly that has a target into 121k. If it breaks out from the neck of 94, we have reclaimed very important levels on the RSI as well, starting with the final support here in yellow and the dotted line downward sloping. We have the stochastic RSI with a bullish cross, yearlies in the green. CPR first resistance has been tested 3 times, 3 days in a row, and the next resistance is at 103. Pivots are here at 85. We got a signal in here from SOPR saying that too many people took profits in the green at 95k, and we now know that most of them are short-term holders and traders, speculators. Here is the past performance of those red signals. All of them in all the bull market have some potential downside, including the 7% in here that looks like nothing is still a 7%. This one here is pretty much a break even, but these ones even in the middle of the pump get 13%. These two sell signals give a 26%. So we'll see if this plays out. Leverage squeeze has now printed 3 consecutive yellow signals. Those are bearish signals. And the open interest percent change oscillator now is putting new highs here at 24%. You can see how many times in the past we've been this high. Let's put the line like this, and you can see that we have to go to February 2024, then in this area of July 2024, and then in the previous breakout in November 2024. But notice that this is a breakout, this was a fake out, and this was a breakout. I will say most of the times when the open interest gets this high, it ends up being a local top. Maybe less than 10 to 20% of the times it's part of an actual rally. And what I mean by that is a rally that actually goes into a new range higher and stays there. Because, for example, all of these moves up of open interest then end up going to a new low. This goes to a new low, this goes to a new low. I'm looking at everything beyond the blue line. That goes to a new low. This is part of a pump. This is part of a pump into a new range. And then again, new low, new low, new low, new low, new low. Part of a pump. So 1 out of 6 maybe is really price discovery or rally. I also wanted to talk about the net taker volume. Taker is when people use a market order instead of limits. When you hear taker, you should think psychology. People missing out on any direction, either negative or positive takers. That means they're either selling or buying at market prices. And at these tops in 2021, they were pretty much all selling with market orders. In this area in here, buying, that was a good dip to buy. Same as here, good dip to buy. Monitoring what's going on with the net taker is really a great alpha. Just be aware that, for example, in the megaphone pattern, every time we enter into the green, that was a local top. So don't only assume that green means a shift in trend always. In here was about to shift, but it couldn't. About to shift, it couldn't. And then in here, it was about to shift, and it did. And it found a new range higher. So at the moment, we have a huge spike in net taker. These are orders buying at market prices, fearing missing out. And we haven't had that since around November 2024. And Big Well Explorer is at the moment noticing a big spike again in deposits into exchanges. And looking at the inflows, it's showing me around 56,000 Bitcoin coming into exchanges versus 7K coming out of exchanges, and that is giving you a delta of around 50K, and that's why we are seeing these elevated deposits into exchanges of 161 ratio. This needs to settle, so we need a few days, because sometimes they deposit but then they withdraw again, and then that giving a delta that is flat, and then the red line goes back below ratio of 1. I've been there just too many times, so this is just an early warning, because distributions like this high 1.6 are now in the range of the distribution that we had at 73.5. At that point we went at 214 ratio, then we went to 175. So hear me out, we are at 1.6. And remember, these are deposits, these are not yet executed necessarily in the exchange, but consider their finger is in the gun and they can trigger any point. And short-term holders as well are now in profit. It's been a long time they're not in profit, and that's why we're seeing elevated profit taking from them. We really need to reclaim that line like we have done in these areas this bull market. Hopefully we're not gonna end up in an area where we just go back up and then down, up and down, because this cycle has turned into something like that, as opposed of previous cycles where the long short-term holder realized price was more like a support line. We're in grid at 65, so we are looking for exits. We are not allowed to look for entries for longs. Of course, you can make profits still if you're entering a long now, but there is an elevated risk. If you want to ignore that, if you are an advanced trader, you are welcome to do whatever you want. Of course, I'm just a dude in internet after all, but I prefer my trades not just to shine because of the profits, but also because of being executed with discipline and with data, because that is what gives me the long-term perspective in making a career sustainable as a trader instead of being just a monkey with a knife. Cerberus buy signal at the moment is about to settle in a buy. If we close Sunday like this, we get that buy signal. Just don't get too excited, because buy signal from Cerberus could mean any of these buy signals 1, 2, and 3 that are just the flip that never happened. I prefer to pay attention to the warning signals and look for longs, and the whole period between the warning buy to the buy, if I'm already in a long, good for me. I don't use the buy signal as an entry because it's either too late or it's the end of the sideways rally, like all this area in here. Only the last buy signal ended up flipping into the other extreme where we see a warning sell. This is just one of the multiple indicators that is included when you get all Pine scripts, and you can also see them from Telegram. So if you don't want to get TradingView, you can just use the Telegram chart and 24/7 get access to these indicators and discuss with other like-minded people that are also part of that group. Go and check out my Patreon. The area shop is where you can find these products. And remember, if we get 1,000 likes, I'll put a 50% discount in the description. All right, let's look at liquidity. On the 15 minutes, I'm not very excited with the liquidity that is on the lower end. It hasn't really managed to get that many longs here in risk relative to all the shorts between 95 and 97. And that's why yesterday I was talking about the perfect scenario will be if price can go into 97, pinch all that liquidity and come back very quickly below 93, producing the perfect liquidity hand. All this area in here basically pinching up but then losing the support, forming like a double top. And that's how we can get way lower with the short. If we go beyond 97 and we start going into this area that there is little liquidity, call it 99, beyond that point, it means that market maker really found a way to hit above 100K, in which case I no longer want to be in a short. In that case, we already flipped completely bullish and we are due for an all-time high, in my opinion. But a pinch just into 97 and that's it, with then a move down that perfectly confirms that we are due to have big volatility to the downside. Once we get into 100K, we get liquidity pools all the way to 125, and I definitely don't want to be in a short at that point. That's the swing trader mindset. To the downside, the biggest and most interesting level is 82,000. And as I showed you before, 88 will form a cap and handle that will be beautiful. But if we go to 82, although that reverses a lot of the rally, I will still say that we have a daily structure that is intact. Look at the daily chart. We have had pretty much from 74 a huge move of 28% without any retracement. Here there is no swing low. There is just consolidation, no low, then back to a high. So this whole move is just a single move. So placing a Fibonacci level in here gives us a golden pocket that can span all the way to 82.6, and that's still a golden pocket. Just visualize it like this. Imagine a move like that, and then you go like this. So basically, there is still an uptrend, right? You didn't even enter back into the falling wedge, but I'm sure that people will make a huge big deal if we were to go to 82, and that is where we could enter big with a long. Of course, subscribe to the channel and I will let you know once we get there. I don't put limit orders that much. I look at data while I'm preparing a deal. Liquidation map of the last 30 days shows that 86 very juicy relative to everything. And one thing that we can say when we do order book surgery in here, forensic analysis, is that the longs have pulled out really big in here. They went all the way to 35. We haven't been with so little longs since January 17th. And at that point, we were peaking in the price. Same as 16th of December, where we had that high at 107. Those are excessive amount of shorts relative to the longs in global accounts on Binance. So that red in there can definitely help put in a local top. I'm not sure how deep we can go from here. People are asking me, where is your take profit level? I do not have now one. I want to see how we develop this. We have a 0.08 of ask in the ratio in here. It's not that elevated, but definitely we have now more orders to sell at the top of the price. We're going to go into trading light and see if that's the case. We have around 1 million in long liquidations delta. That puts the longs at higher risk. That is no surprise. We can see in fire charts that there's been tons of suppression up until 92k. We need to decrease the percentiles to more or less 98 to be able to see, but the orders are above the price, and below the price we have support at 89, but it's very shallow, the support below the price at the moment. And purple whales really push up until we got to 93k. After that they've been decreasing their holding. Those are not the largest ones. Actually the brown ones are the largest ones, and they are still pushing higher. But the purple ones tend to be the ones that lead the direction of the price. Those are 100k to 1 million. Let's go into the order book and let's see what's going on right next to the price. And we can see that now the suppression is to short the price. And I managed to get in at this week at 95,500. I shared the position with my Patreon community, and I say before the video that that was my intention, but of course my Patreon community is very spoiled. They already know that position. I don't know if it's going to play out. I never know anything. I just look at data, and I can see in here that there is the typical weekend price suppression. Support is 470, a few levels of 400, but above we have big chunks, and then there is some orders at 91,500. The most traded volume in this range is around 93,500. So if you really want out of the short in a small profit, this area of point of control, if you want, of this range could be the safest exit, 93.5, followed by 91,500. And then we are talking about the CME gap that is also around here. Something to note that I always keep an eye on is my net longs shorts delta that now has pinched the top and come back. The last time we did that, I was on holidays. It came back down all the way to the center line, and that's precisely where it found support to put a new impulsive move. We pretty much exit our short position in a small profit around here before it shoot back up. Now we're pushing back down. Price has been going up. Now it's starting to catch up with the longs pulling out. You can see a small move down with a larger pull out of longs. I am hoping to see here some longs liquidations that we don't have since the 7th of April. Typically end of the month we get some liquidations of longs. That is just past performance. And fair value gaps, we have the two fat dudes that are still surviving in here from 91.7 to 88.5 and then to 84.7. And we can see why that happened. Price went straight for the fair value gap of 95. That is all the shorts that were from the pump trump there. And we can remove that now. We have still the 97 though. It's very thin, and there is a likelihood that we still kick that one before we even talk about any of the rest ones. I don't discard that. And you can see all these annotations that I'm doing in here. I can always get them from Telegram. So for example, I click Bitcoin and then Bitcoin fair value gap. And after a few seconds, I get precisely what you were seeing in the chart. I just need to make sure that the lines are more to the left-hand side so you can also see them in that chart. Guys, I'm currently hosting a position airdrop on Bybit. The link is down there in the description. If you use that link, make sure that you click the button register to claim. And by doing that, you're going to get $500 to trade any of the coins in this list. You can keep all the profits from that. There is still a month to take advantage of this promotion. Thanks so much for watching. I'll see you in the next one. Take care. Bye-bye.